Welcome. You're listening to The Best of Investing. I'm your host, Edward Brown. Our phone number is 888-912-1190. Use that number to answer the trivia questions for a 5-pack tanning certificate given away during the show. And that certificate's not sponsored by the radio station, but by Tan Bella Tanning Salon with 2 locations in San Francisco and 1 in Marin County. Today's trivia theme is celebrities. Now, my regular 2 co-hosts, Mark Hanf and Nam Phan, are off today. They're busy closing some deals, so they couldn't make the radio show today. But we do have a special guest, Jeremy Goodrich of Shine Insurance. I'm going to give a little background. Jeremy is a commercial real estate insurance advisor who's been teaching investors how to buy and protect property since 2013. He's the owner of Shine Insurance, which aims to protect some of the top real estate investors in the country and creator of the New Home Buyer's Guide. Jeremy, welcome to The Best of Investing.
Edward, it's a pleasure to be on your show. Thank you so much for having me. Looking forward to making insurance interesting and really digging into a topic that some people don't necessarily want to talk about that much, but is actually at the heart of where success lies for really all commercial real estate investors.
Okay, so I have my life and disability insurance. So I know a lot about life insurance and a lot about disability insurance, but when it comes to property and casualty, I leave that to you guys, the experts. First of all, let me ask you, Shine Insurance, how did you come up with that name? Or
So I was an elementary school teacher for 13 years, and I met my wife and business partner during that time, and she was a third generation insurance agent, insurance advisor. Her grandpa started an agency, dad took over. Ultimately, dad sold it to a national conglomerate, and so we decided to start our own agency. She left the agency she was working for her dad, and I left teaching, and we decided to change the way people feel about insurance in our small little way, as much as we could, to take that on and see what we could do. And we didn't want to use our last name or whatever. So we were like, what can we use for the name of the business that really embodies the feeling that we want to create for other people? And Shine just kind of felt right. You know, it could be intelligent. It could be the light at the end of the tunnel. I think a lot of the metaphors around the word worked really well. And so that's what we went with.
I mean, you got a great last name too. You know, Good, Rich. You know, it's
right.
Good and Rich together is pretty good.
Yeah,
I think that having the background of being a school teacher for so long, gives you the ability to make a potentially complicated subject like property and casualty insurance a little more simpler for people to understand.
Yeah, I think that being a teacher, as all teachers, probably many of your listeners have been teachers at one point or another. I know that about the real estate industry.
I have.
Yeah, awesome. So, I think your biggest skill as a teacher is not necessarily your knowledge of the topic. It's your capacity to take that topic and explain it at the level of whomever your students are, right? If you're a high school teacher, it's that level. If you're an elementary, 3rd and 4th grade teacher like I was, then it's at that level. And I think that capacity to take something, boil it down, and be able to share it with someone else simply is why so many teachers succeed as salespeople or other types of roles. It's just because you're capable of just being authentic. Like I know that I'm not out here to, take anybody's money or any of that kind of stuff. Like, right. That's just where I come from. And then I can explain things fairly simply. So yeah, I think coming from a teaching background is a big part of where I see my value and my authenticity from.
I can really appreciate that because I taught income tax at the graduate level. And so, for a lot of people, even if they're smart, understanding taxes is kind of another ball game. Fortunately, when I taught, the tax code was a little simpler. It was still complicated, but it's, and so trying to get people to kind of understand how things work. I think that actually is one of my skill sets because, especially when the main business that I do is investor relations at Pacific Private Money, and people are trying to understand, how does this work? Why would anyone pay you a high interest rate for a loan? Why don't they just go to the bank? And so I kind of go through the process, of why some banks don't make these kinds of loans, even though they're conservative. I've written articles on that stuff. But and
I think that's one of the bottom line things too when you're making decisions about service providers and all those kinds of things is, can they explain things simply to you? Whether you're looking for your personal financial advisor or your college professor, or you're looking for someone to be your attorney or tax advisor as a commercial real estate investor, like if you're looking at your team of people and they can't explain things simply to you, then you've got the wrong team of people.
Yeah, and especially when people try to impress other other people with acronyms and stuff. And it's like, you know what? What does JLP stand for? Well, I don't know. I mean, but once you tell me, then I'll understand.
Yeah,
It's like the first time I learned about debt service coverage ratio. And once I understood it, I go, oh, okay, now I get it. All right, now what's the DSC coverage? All right, I get it.
Yeah, one of the things I teach my team is you can't speak industry language when you're
Yeah.
speaking with everyday folks. Like when you're inside the industry, you can use industry language because everybody speaks the same language. But when you turn that outside, you have to be able to speak in everyday language, or you're just never going to make a connection,
Yeah, and especially, doing insurance is, you gotta be a good salesman too, because it's not the type of situation that's gonna make people rich. It's gonna be more of you're trying to save them money and protect their assets.
Yeah,
And
absolutely.
trying to explain people about how deductibles work and co-insurance and stuff like that. And I get that it's going to be a little challenging. Tell you what, when we come back, we'll start getting into all the great questions and all the advice that you can teach everyone. We're going to go to our first commercial break here. The theme is celebrities. And again, just to remind Jeremy here, if you know the answer, don't say anything yet until we get back. All right. First trivia question. This actress was awarded an Oscar for her performance in Monsters Ball and Catwoman. Who are we talking about? All right, what actress? Yes, you got a question mark there. You may not know the answer. All right, call 888-912-1190. First caller with the correct answer is going to win that tanning certificate, which, by the way, is worth over $100. So it's a nice little gift that we're giving away. This actress was awarded an Oscar for her performance in Monsters Ball and Catwoman. What actress are we talking about? Stay with us. The Best of Investing will be right back. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Jeremy Goodrich of Shine Insurance. Our first trivia question was, while this actress was awarded an Oscar for her performance in Monsters Ball, and then she also played Catwoman. She didn't win an Oscar, I don't think, for Catwoman, but she played Catwoman. Who are we talking about?
Well, I have no idea. And I will say over the course of this interview, your listeners will understand that I'm not very good at trivia, but my guess is I got Anne Hathaway in here somewhere, and that's going to be the guess I'm going to throw out. I give it about a 10% chance of being right.
Closer to 0%, but Halle Berry.
Okay.
The other two ones will be a little bit easier, I think. So
okay.
All right. So now we have Jeremy Goodrich on the line here, and actually, you're from the East Coast, aren't you?
Right in the Midwest. I'm in Bloomington, Indiana, about an hour south of Indianapolis, Indiana. So, yep. I grew up in California. I grew up in San Diego, California, but came out here in middle school and been here pretty much ever since.
Oh, probably your dad had a job change, that sort of thing?
Yeah, my dad was a preacher, and he decided that God called him from San Diego, California to Indianapolis, Indiana. I'm still a little bit angry at God about that, but we're going to be okay.
God says, I'm going to play a trick on you. Well, you know what? It's funny because in California, we sort of joke about it being spiritually and morally bankrupt, So we probably went to a place where there were people who were already saved. It's a little easier probably.
Yeah.
Not the weather, but the people. All right. So Jeremy, regarding insurance, and do you do just commercial insurance?
So our agency, I do only commercial real estate insurance. So we have a commercial real estate program. It's a national program. I take care of retail, office, industrial, self-storage, and apartments. And but we do home and auto. That's where I started. I came from it, like we talked about before the break, from being an elementary school teacher. So I started in home and auto insurance and really grew up into the commercial real estate world.
Gotcha. One of the questions I don't have here that I'd like to ask you first, if we could, flood insurance. And it's funny because California right now, we're going through a lot of rain that we haven't had for a long time. I've been involved with some projects where it was just like unconscionable because it would never flood, but we apparently, like FEMA would sort of throw it all on us to pay for all the hurricanes and from other parts of the country. And it was outrageous, the premiums that they wanted. I think they've come down a little bit. What's going on with flood insurance?
So I think it's important for your listeners to understand when you buy property insurance, you're buying insurance coverage for certain bad things that happen, right? A fire or a tornado or things of that nature. And certainly in some parts of the country, some things are excluded. Well, in fact, in the entire country, flood is one thing that is excluded from property policies. That's
That's where you
homeowners
have to buy a
policies, that's
special flood
property.
policy.
Yeah, you have to purchase a special flood policy. And even if you're in a very low risk flood area like I am in southern Indiana, the insurance premium can feel kind of expensive. It's for my homeowner's policy about $600 a year, right? And my entire homeowner's policy besides flood is only about $1,000 a year. So
Oh,
you
wow.
can see that it's drastic. It's very close to the same cost for all the other things.
And
Now, when you
so hold on, if you own your house free and clear, you probably don't have to have it. But so your lender is requiring flood insurance. Even are you in a flood zone?
So my lender does not require flood insurance. In fact, I don't personally carry flood insurance,
Oh, okay.
but that is, you do get at the heart of why most people do. Because it's so expensive, for the most part, your lender is going to decide whether flood insurance is required. Now, anyone can buy flood insurance if you want flood insurance, and oftentimes it's a good idea. But if you're in a high risk flood zone, then your lender is going to require that you purchase flood insurance. And that can be a big expense, especially because high risk flood zones have higher costs for insurance. I said it was maybe $600 where I live, but I'm not in a high risk zone. If I were, it could be $2,000. $3,000, and that's obviously a huge expense. And then if you cross that over from homeowners to commercial real estate, which I do all the time, I put a policy in place just recently for a 300 unit property in Houston, Texas, that was in a flood zone. So we had to navigate not only hundreds of thousands of dollars in insurance premium for everything else, but almost $100,000 in insurance premiums just for the flood exposure. And that was required by the lender, in that case, a Fannie and Freddie loan or Freddie loan, because it was in a high risk flood zone.
And here's the funny thing: the project I was involved with, because it was a levee, they decided, near a levee, they decided, oh, even though it hasn't flooded in 500 years, it might, and the premium was going to be 80,000 until it, kind of pushed back on it. And it's interesting because here in California, everyone's earthquakes and all that, but I've yet to find anyone who really owns earthquake insurance because it's so expensive and the deductible is so high that it's almost not worth it.
Yeah, and the premise is the same in California, right? Earthquake coverage not going to be included in any standard homeowners or property policy in California for obvious reasons. You're going to have to purchase that separately, and it's going to come at a significant cost. For me, earthquake coverage is actually included in my homeowners policy without any additional extra cost. Why is that? Well, I'm again in the Midwest, and there isn't really as high of an exposure to the possible risk.
Exactly. Okay. Question number one, what is the number one insurance mistake made by property investors?
The number one insurance mistake is really simple. It's not finding the right advisor. So I'll get into some things that, are other mistakes you can make. But if you have someone who can explain things simply, lays things out clearly, is not out to get you the absolute cheapest policy, which is ultimately not going to take care of you in a claim, then that solves a lot of the problems that you have behind that. So the number one mistake is picking the wrong advisor.
And you're independent, right? So you can sell a bunch of different policies, right?
Yeah, and that's an important point. Yeah, I'm independent, so I don't work for insurance companies. When we started our business in 2013, we went out and started attracting insurance companies. Hey, we'd love to have you in our agency. Of course, you're going to be competing against other companies in our agency, but we'd love to have you here. And some agencies have one company, like a State Farm or an Allstate, or a lot of those, Super Bowl commercials. Those folks have one company. So when you go to them, you're going to that one company. Other agencies have a few. In our case, we have, about 100 insurance companies that we can go to at any given time, depending on what the type of
and the thing is, some companies will be better one year and then they'll have claims or whatever, and then the next year some other company will be better. And it's interesting. It's kind of rare that a major company will be the best. I know when I used to did like life insurance, I remember Northwestern, the Acquired company, and they called captive agents, and their policies were not nearly as competitive as the ones that we used to sell the clients. Tell you what, we're going to cut to our second. It's going kind of fast here. We're going to cut to our second commercial break on celebrities here. Even though this actor won an Oscar for the 1996 film Leaving Las Vegas, he was nominated for the 2003 film. He was subsequently nominated for multiple Razzies for his acting in Ghost Rider and The Wicker Man. What actor are we talking about? Call 888-912-1190. First caller with the correct answer wins that tanning certificate. Stay with us. Best of Investing will be right back. Welcome back to the Best of Investing. One more time, I'm Edward Brown, your host, along with my special guest, Jeremy Goodrich. Second trivia question. This actor won an Oscar for the 1996 film Leaving Las Vegas and was even nominated for a 2003 film. I didn't have it in here, but he was subsequently nominated for multiple Razzies. I guess that means bad, for his acting in Ghost Rider and The Wicker Man. Who are we talking about?
Again, I have no idea.
Okay, if I give you a hint, he was also the star of National Treasure.
Nick Cage?
Yes, Nicolas Cage. Yeah, and
right.
you know what's funny is my wife actually used to be in a children's theater with him. Huh. So we're talking about when he was like, I think he was a year or two older. So we're talking about in the late 1970s, late 1970s. And interestingly enough, it was his uncle's Nick is Coppola, but he purposely he wanted to change it to Cage because he didn't want any special treatment. And she said he was like one of the hardest working people. So one of those guys who actually earned it, which is pretty kind of
absolutely
cool.
Well, there's a name now. There's a modern name for people who are like already in the industry and come up through the industry. I can't remember what it is right now, but
yeah. Okay. Question number 2, why is a quality service team so important and how do you build one?
So I think this is great, especially for commercial real estate investors. But even if you're doing residential, like you've got to have the people who take care of you. It's anyone who's built a business, you start off kind of self-employed, right? You say, okay, I'm gonna build this business from scratch. I'm gonna bootstrap it. That means that I wear all the hats, right? I'm the salesperson. I'm the delivery person. I'm the service person. If something breaks down, I got to fix it. And I think those folks who find success in business are the ones who can most quickly figure out how to become the coach and not the team, to figure out all those other people. And I think we all struggle with that. But once you get to that place, suddenly you own a business rather than being self-employed. And I think that transformation is really important. And the great thing about it, and I'm coming into it 10 years into the business, it's taken me this long to even sort of see the fruit of this kind of thing. But you start to gain passive income from your business. When someone else is the salesperson, when someone else is the service person, when someone else does the marketing, suddenly the money that comes in didn't require your time. And I think that's the ultimate goal and why building a service team is so important. Now, that's your employees as well as the people who serve you, your accountant, your lawyer. In the commercial real estate world, your property manager is the absolute #1 service team member. Yeah. You have to respect them. You have to see them from the perspective of not being a commodity, but being someone who's on your team. And I think there's a lot of terrible property managers out there. So if you're one of those asset managers, you're one of those sponsors, you're one of those property owners that has a great property manager, you've got to respect those folks and make sure that you're taking care of them as well.
I can speak from experience. I've had property where I had an absolutely horrendous property manager.
There's a ton of them.
Destroyed it, and then I had property where I had a phenomenal one, and it increased the value. And yeah, I totally respect them. Let's kind of get into a little story here. What's the craziest claim, and how did you play it out, rather than just like you said, having a good team? It's like people call up and they want to put a claim in. You said, we don't pay claims, we just collect premiums. So what's the craziest claim you've had?
There's been a lot of them, and most of them are fairly boring stories, right? I had one recently where a water pipe burst because it was incredibly cold, and water pouring through the property, a 3-story property. The pipe burst on the 3rd story, which means the water comes through the insulation, everything. So it could even be a total loss for that building in the end. But probably the craziest one was the morning after Thanksgiving, about probably 5 years ago at this point. And I got a call from a property owner, and they said, Jeremy, you're not going to believe this. We had a fire in our property. And I said, okay, that's certainly not the first time I've heard that. and wasn't the last, obviously. And I said, how'd it happen? And he said, well, have you ever heard of deep fried turkey? And I said, oh, yeah, deep fried turkey. I got a video on my YouTube channel about that. You know, you take it outside and you got a big pot of boiling oil, and you've got your turkey and you put it on kind of a hanger. It looks like a clothes hanger, and you dip it down in, and it cooks it way faster than putting it in the oven. And it tastes a whole lot better. It may not be better for you, but it tastes a whole lot better. I'm very familiar with deep fried turkey, but wait a minute. You said it was a kitchen fire.
Yeah.
Someone tried to do this in their kitchen, and that was exactly right. Someone tried to deep fry a turkey on their kitchen stove, which I don't recommend at all. And as you maybe know, Edward, if you do anything wrong with deep fried turkey, you end up with a grease fire. And in this case, they had not thawed their turkey properly, and so they dipped their frozen turkey in, which created sparks of oil that then hit the stove. The stove then created a fire, and there we had a pretty large fire.
I know you don't want to put water on it because that just spreads it further. It's funny. I've heard of deep fried turkey. It sounds phenomenal. I now know how to make it because when
there you go.
Outside, sort of like, oh yeah, it was cold outside, so we decided to barbecue with charcoals inside. It's like, no, don't do that.
Exactly. That's exactly what happened. And that was an interesting one, because the claim, they actually got the fire out fairly quickly, as it could have been much worse. Yeah. But it ended up being a $50,000-$60,000 claim, and the big problem was the smoke damage. It was across the entire area, and the smoke damaged anything fabric. And so that was a significant claim. Could have been a lot worse, though. They were able to put it out before.
Well, it's the same thing with when you have like a building and there's a small fire, but the sprinklers go on, and it's the water damage that does the main thing. I'll tell you what, boy, this is going fast, but here's our third trivia question. We're talking celebrities. Although moviegoers loved his portrayal of John McClane in the Die Hard films, and TV viewers enjoyed his work previously in Moonlighting, which action star won the Worst Actor Razzie in 1999 for his acting in Armageddon? And then he also was apparently in Mercury Rising and The Siege. But if you've seen any of the Die Hard films or the old Moonlighting TV show, you'll know who we're talking about. Call 888-912-1190. First caller with the correct answer wins that tanning certificate. Stay with us. The Best of Investing. We'll be right back. Welcome back to the Best of Investing. Edward Brown, along with Jeremy Goodrich here. Third trivia question, which Jeremy says he knows this one. Although moviegoers loved his portrayal of John McClane in the Die Hard films, and TV viewers enjoyed his work in Moonlighting, with this action star won Worst Actor Razzie in 1999 for his acting in Armageddon. Who are we talking about?
Well, I just watched the Die Hard movie with my 16-year-old and 15-year-old nephew, and that certainly wasn't the first time I watched it. It's Bruce Willis, of course.
Bruce Willis, yeah. Did they like it?
Oh, they loved it. I mean, we debated the whole time whether it was a Christmas movie, which is kind of the fun part, right?
Isn't that funny? Yeah, because just because they in the movie it happened to be during Christmas time. Yeah, well, listen, you just batted 333. That'll get you in the Hall of Fame, right?
Absolutely.
All right, we have a few more questions for you there, Jeremy. Let's see here. Here's an interesting one. Should I hire a public adjuster? So tell us what that's all about.
This is a great question. So when we deal with insurance claims, there are adjusters, and there's a variety of types. And the adjuster is simply a person who makes decisions about an insurance claim. When you call an insurance company and say, hey, there's water pouring through my ceiling, I need you to get engaged, they put an adjuster, it's called a company adjuster, on the thing. They'll go through the process with you and write checks out as makes sense. Sometimes a policy holder can decide to hire their own person who then investigates and sort of goes after the insurance company. And that is called a public adjuster. And the best way to understand this is something that we all know, which is personal injury attorneys, right? If you think about the folks who have the billboards everywhere and they say, hey, if you've been in an exact accident, call so-and-so, they are the exact same role. A personal injury attorney and a public adjuster are the exact same thing. The difference is a personal injury attorney is going after what's called liability coverage, bad things that happen to other people because of you. And a public adjuster is responsible for property claims. So I don't know if that was too detailed of an explanation, but your question was, should I hire a public adjuster or not? The thing you have to understand about public adjusters is, of course, they want money, and they're going to take between 15 and 20% of the payout from the insurance company that you get. Now, the adjuster will say, well, we're going to increase the payout by at least that much, and that's their pitch. My advice to you is, if you feel like the insurance company is doing you wrong, if you've gone to the point where insurance company is not taking care of you, they're not making you whole, which is the whole point of the insurance company, maybe it is time to hire a public adjuster. Also, if you have a large commercial property claim, if you've got a claim that's going to be millions of dollars paid out because of something that, I had a claim recently with a client who, another water damage situation, but this time it started on the 10th floor of a 30-story building, right? I mean, this is going to be millions of dollars in loss. And the people who own that business don't want to have to navigate that whole claim on their own. It might make sense to hire someone to help you work through the claim.
You can pay, you don't have to pay them a percentage of the claim, right? You could just hire them on a project or hourly basis, couldn't you?
Public adjusters in general will charge for percent of the claim. So
But then
what they want to,
so they have an incentive actually to increase the claim.
right, which sounds good, and in a liability side that makes sense. The downside is that property claims generally, if the insurance company is doing what they're supposed to be doing, then they're going to pay out the amount of money that they're going to pay out. In fact, if you get to the limit of insurance, that's all there is anyway.
Yeah, you can't get more than that. But then also, wouldn't you? That millions of dollars is a whole different animal. But your typical claim, I mean, wouldn't you get bids from contractors to fix what's needing to get fixed? Forgetting liability, we're talking about just fixing
property.
The property,
Yeah.
fixing the property, and so you can kind of get an idea as to what it is. I remember it was very interesting in the old days with car insurance, where they basically, okay, you got to give them 3 bids or whatever, or, well, actually, you didn't have to, technically in California, I think you only had to give them 1 bid. But it was really interesting that these insurance companies now, they just pretty much, oh, this fuse costs, $3, and this, I mean, they have it all to the penny as to what they're basically saying. This is what the claim is worth.
Absolutely. And I think that's the bottom line. Is a public adjuster is always going to tell you that you need them because they want to make money. But the reality is a public adjuster oftentimes mucks up the process. It's also important to know that once a public adjuster is involved, the money flows from the insurance company to the public adjuster, and then they only give you what you get left from that. And that can create real problems. So my advice is simply, just like anything else, if you're going to take an action, make sure you understand what you're getting into. And I would advise against a public adjuster in smaller claim situations or in 1 to 4 family properties, unless you just really feel like the insurance company is doing you wrong and you aren't getting any help at all. And that might be the right time.
No, that totally makes sense. And then 80% of real estate investors are likely not protected. Apparently, or what do you mean by that? You didn't mention that in here.
I hope your listeners hear that really clearly. I see policies all the time. When someone wants to get insurance from us, one of the first things that I say is, okay, yeah, why don't you send over what you have right now? And I'll take a look and just see if connecting makes sense. And I see over and over again, especially with small property owners from 1 to 75, 100 doors, I see insurance policies that are woefully not prepared to actually cover you in a claim.
Or are they going to do whatever the minimum that the bank is going to force them to get? And typically,
Well, it depends on the lender. I mean, a Fannie Freddie, situation, they require such high limits. That's an important thing to know. If you're going to get in the Fannie Freddie world, you're going to have additional insurance costs, especially if your insurance policy is junk in the first place. I think there's a lot of things in the insurance world that are exclusions from insurance policies. You brought it up at the beginning of this conversation.
Yeah.
One thing is co-insurance penalties. If you underinsure a building, let's say a building was worth $1 million and it was completely burned down. And you insured it for $500,000. The insurance company is going to penalize you by 50% in a claim scenario, even in a small claim. So let's say that same building had a $50,000 claim. They're going to look and say, you only insured it for 50% of what you should have. So we're only going to pay out 50% of that claim. That $40,000 claim now becomes $20,000 paid out minus your $5,000 or $10,000 deductible. You can see how you thought you had insurance, and suddenly all these exclusions or co-insurance clauses are going to penalize you. And that's
so. What point do they not penalize you?
Well, it depends on the policy. So I write policies almost exclusively that have waived co-insurance, which means that penalty I just described does not apply, right? Yeah. And so, or I certainly write limited co-insurance penalties. Yeah. There's something called ACV coverage, which is like if you have a roof that you need to replace, and that basically you're going to get a whole lot less money in a claim than you would get if you didn't have ACV coverage. So these are just a couple of examples of things you have to watch out for.
Okay, when we come back, we don't have a trivia question, but stay with us. We'll be coming back with some closing comments. Don't touch that dial. Welcome back to the Best of Investing. Last time for today, I'm Edward Brown, your host, along with my special guest, Jeremy Goodrich. Didn't have a trivia question, but Jeremy, we've been talking for a long time, but people don't know how to get a hold of you if they have insurance questions. Why don't you give out your information?
Yeah, just shineinsurance.com. It's the best way to get a hold of us if you have insurance questions. We also have a YouTube channel that has about 20,000 subscribers, so you can head over there, see a lot of answers to a lot of questions, and obviously all over the socials. But shineinsurance.com is the easiest place to do that.
Very good. Okay. We have a question here. Last question that we have for you is, do you invest in real estate yourself? And if so, what types?
Absolutely. So I'm an LP investor in multifamily particularly. So I take the active income from my insurance agency, and when there's excess, I invest it passively in multifamily deals. I have a deal in Indiana. I have a deal in Texas. And then I have a little bit of oil and gas, which is not real estate, but is in the mix there.
Very interesting. Okay. And do you ask for their insurance policies? You kind of like double check on them?
Well, I invest mostly in deals that I know the investor, and oftentimes am the insurance advisor. So, I'm underwriting deals every time I get OMs or front end, information. I'm essentially underwriting a deal from the insurance perspective. So I can tell pretty quickly whether I want to invest with a sponsor, whether I want to invest in a deal, and whether it makes sense for me. And that gives me the position to be able to decide whether it makes sense to put money in the deal.
Very interesting. Okay. Any last moments before we get to our thoughts for the day?
No, absolutely. I just think that, insurance, it really plays a role in our journey. If insurance wasn't there, none of you listening would really be investors. It would only be the richest of the rich that would be able to invest in real estate, the ones who could handle the losses without having to take someone else's money. So I think if we shift our mindset just a little bit, it really helps with how we see this piece of the picture.
Yeah, you can't really self-insure unless you own a property free and clear, because your lender is going to require you to have liability insurance. Do you see many people self-insure?
Well, once you get to about 2,000, 3,000 doors, you can really get into the realm of, captive insurance, self-insured retentions. And what we're essentially doing there is saying, hey, we'll self-insure for, say, the first $1 million of loss. Any first $1 million we're going to take, but we've got $270, $280 million of real estate in a portfolio like that. So we're not going to self-insure all of it. But yeah, you see self-insuring at the lower levels. And I see self-insuring for someone who has a large portfolio, maybe single family properties or something like that, folks who really have a lot of cash on hand. But that's that balance of risk and reward, right? What are we going to take on ourselves, and what are we going to pass on to the insurance company?
Yeah, the insurance I have for a commercial building, I think, is one of the reasons probably fairly cheap, is because the thing's made out, it's a concrete tilt-up building. It's like, what's going to burn?
Oh, yeah.
Only the insides, and then the insides are covered by the
The
tenant
tenants.
anyway.
Yeah.
Yeah.
Yeah, joisted masonry is much, or those kinds of constructions are much cheaper to insure than a frame construction. A 1970s frame construction on hurricane coasts is the most expensive thing to insure
Sure.
anywhere around the country.
Yeah. Well, if they haven't already been wiped out, they probably
Right.
will be.
Yeah.
All right. Again, Jeremy, give out your information one more time in case people have insurance questions for you, please.
Absolutely. Shineinsurance.com is the best place. And then our Shine Insurance YouTube channel would be the second best.
Very good. Okay, here's our thoughts of the day. What do you call 50 penguins in the Arctic? Lost. Really lost, because penguins live in the Antarctic. Or Antarctica, I guess is the way it is. And how was the snow globe feeling in January? A little shaken. All right, and with those daddy puns, as my daughter used to call them, tune in next week to The Best of Investing. We're going to be giving away more free prizes for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long.